Hello everyone, and welcome to this week's Motor Trade Radio podcast, powered by eBay Motors Group, with Philip Nothard and Curtis Hutchinson, bringing you all the chatter that matters.
Well, I wonder, Curtis, if people have got their pots of tea ready for this week in preparation after last week's marathon. Or should I say urn? Or, I mean, it's what are they called? The big, it's big pots you want, don't you? But
or even a flask. Could go old school
like
and have
old
the
school,
flask.
Yeah. I want to tell you a story about my dad having a flask at home. We always questioned why he would sit drinking his coffee out of a flask all day, and he said it's so that I have to boil the kettle and I get me hot coffee. But anyway, it's a whole different story. But anyway, so we have got a packed show today for you. Not quite as packed as last week's, and I hope you did enjoy last week's, especially with the catch up there with Harvey from Key Loop, and obviously the snippet there from Steve Young. But it was a packed show last week, wasn't it, Curtis?
It was indeed, and I think you're right that this show will be packed. Possibly not as packed as last week, but getting on for it. So this week, we've actually already spoken to Jeremy Yea, who's one of the editors there at CAP HBI, talking about July's values, and we'll have a snippet of that interview on today's show. But some great insight there from Jeremy, and it's really, really interesting now looking at how the market's panning out.
Yeah, we won't spoil some of the key points in that interview as yet, but say we'll share a snippet. But do listen back to the full interview with Jeremy that was shared on your podcast feed on Thursday of this week. And this week we are going to be joined again by our resident mental wealth wizard. That's in Stephen Whitton for his latest on Menable moments. So stay tuned for that one. I kind of know what some of this includes, but I'll leave a surprise for you on this one, Curtis, because you've not listened to it, I don't think, before we'll...
I haven't. I will be listening to it live shortly.
You will.
So that's in the second half of today's show. And final shout out this week, I had a press release sent to me just before we started recording about a new Apple docu-series, which is called Wanted, The Escape of Carlos Ghosn. I can't wait. So it goes live. It starts streaming on 25th of August, and it's described in the press release as a thrilling international true crime series. And it looks fascinating, doesn't it? Because it's based on a book called Boundless, which was written by a couple of Wall Street Journal reporters, and includes interviews with all the key players, including Carlos Ghosn.
Yeah, I mean, I've only started to watch the trailer there on YouTube, and we will share a link to that on the newsletter on Monday morning. But it does say that the riveting story of CEO turned fugitive Carlos Ghosn, including his reign of power, shocking arrest, and a calculated getaway that stunned the world. I mean, I just started to watch the YouTube trailer, and it is like a Mission Impossible kind of trailer. So it may actually make me subscribe to Apple TV just to be able to watch that one. But
and then we can do weekly updates, can't we, on the pod? What happened to Carlos this week?
If you subscribe, and then if you let me know your login details, then we can share that, Curtis.
I hope Netflix aren't listening to the podcast this morning.
But we'll keep you up to date with that one as it develops.
Motor Trade Radio podcast, powered by eBay Motors Group.
So headlines this week are from Car Dealer, AM, and Motor Trader. Lookers directors agree to updated takeover offer by Global Auto Holdings. Is the deadline for the 2030 ICE ban in doubt as government reconsiders net zero strategy? 2/3 of used car dealers are worried about margin erosion. We also have 2 acquisition stories involving Motorway and Carlisle. And finally, this week, we've got a who's who to the 18 brands who say that they're embracing agency. But first up, here's a snippet from our chat with CAP HPI's Jeremy Yea, looking at July's trade values.
Let's start off with the headline that the trade values at 3 years, 60,000 miles have dropped 1.9%, and that's approximately £350 drop for the month. And do you want to talk us through of what drove it and how does that compare with previous July performances?
Yeah, sure. So I think I'll start with, to put it into context, pre-COVID, taking out those crazy years of those the rises through the summer period of a couple of years ago, where we're circa sort of 30% higher. I think the market's fallen back into some sort of seasonality. In context of pre-visualized before COVID, like I said, it's, if we go back to 2012 when Cap Live was introduced, there's an average move of 1.2%. So 1.9, you think, oh, okay, it's a bit higher, but bearing in mind we've had a very strong start to this year. We're still carrying strength from 2 years ago, so 1.9% seasonal move isn't out of the way. I think the highest move we had was 2019 downward move, and that was down 2.2%. So it's not the strongest movement down we've had in from July into August monthly book in Cap Live values. But it is close to being that. But bearing in mind, like I said, January to March was a very strong start to the year. So I think it's sort of correcting itself still from the strong points of where we've been.
And in terms of, standouts, what stood out in terms of those different age bands? Because we always talk about that 3 year 60, but in terms of what stood out from the different performances by age bands.
Okay, so if I start at 1 year, 10k dropped 1.6%, and that's around £525. If we go out to the older age points over 3 year 60, 5 year 80, that dropped 2.2%, and that's around £250. 5 years dropped 2.9%, and that's only £135. So it's sorry, let me correct myself there. It's 2.2%, £250 for 5 years, and 10 years is £135. So it's not, even though they look like larger percentage points, it's smaller in terms of monetary terms.
Yeah, as you say, with those 10-year 100,000 miles, you are talking small monetary movements there, aren't you, on those kind of vehicles?
Yeah, I think that area of the market has been under pressure for a little while. I think condition is obviously key within sort of 5 to 10-year-old vehicles anyway, and certainly over 100,000 miles. I think the market's toughened up quite a lot in that area, and that's probably for the last few months, not just this month. So yeah, I think even though it looks like a larger percentage drop, monetary terms is quite the norm, I would say.
Well, as I said there, Curtis, it's always informative, and Jeremy there again stepping in for Darren. And as I said at the start of the show, it's always worth going back and listening to the full interview with Jeremy if you've not heard it. They'll give you the context and some of the detail behind it. But yeah, in terms of where the values are going, down 1.9% at 3 year 60. The biggest movement since 2010, I think it was. So we're seeing a slight movement towards what many may say a normalised market. But, again, as we've said there with the chat with Jeremy on the full interview, that you've got to understand where those values have come from to put context in it. And the same with EV. EV is still under a lot of pressure, but again, they have come from a very high point and challenged in the marketplace. So yeah, great interview again, as always, there with Jeremy.
Yeah, definitely. And there's a couple of points that Jeremy does make in the full interview is, as you mentioned there, this sort of normalization and seasonality, which are words that we weren't using much about the used car market, certainly not for quite a long time. So it is good to see that creeping back in now, and just makes it a little bit more predictable for dealers, especially when they're stocking and pricing cars.
Definitely. So, first story of this week, and a little bit of a disclaimer on this one because it is an ever-evolving story. See, this at the time of recording, the headline was that Lucas directors agree to takeover offer by Global Auto Holdings after raised bid is tabled. Now, this is a story that Car Dealer have covered, saying that the offer has been increased of 130 pence per share, and values lookers at 504.2 million. It's an increase of 8.3% on previous recommended offer of 120 pence per share announced on the 20th of June, and saying that the better offer is a premium of 46.6% to closing price of 88.7 pence per share on the 19th of June, and saying that the Lookers shareholders will be recommended to accept the new offer. Now, that is what it was, Curtis, at the time
Yes.
of recording this.
Yes, we'll keep our fingers crossed on this one, but this story probably will evolve. But I think the main significance of the story is that last time we reported on this, which Phil was only last week, was the update then was that Constellation through Cinch had actually rejected that initial bid and were suggesting that they would favour one in the region of 130 pence per share. And that is now what's being offered by Global Auto Holdings, the Canadian group who expressed this interest in buying Lookers. So it will go to a shareholder vote, and we'll see where it goes from there, really. But the amount that was asked for has actually been offered, and that really is significant.
Yeah. I suppose it's back to the Pendragon days when we talked about the Pendragon and the Heading acquisition and Lithia going for it against Heading and all that went on a week by week basis, and then nothing came from it,
yes.
did it at the time? So you just don't know where these things do end up. I mean, again, significant offer, particularly when you start to look at what the shares were before the initial offer came in, from going from 88 to 120 a share, now going 130 a share on the table there, and valuing the business at over 500 million. Many might say that the business is worth more than that. But again, the directors are saying that it's a good offer. It's what the Constellation through Cinch have said they'd accept after pulling away from the initial 120 share. So again, you just don't know where these things will end up, but I'm sure there'll be people that have got shares will be buying them, selling them. Should have sold them? Have I bought them? What am I doing? Yeah. But it'll be interesting. So we will try and keep you up to date on this one as it evolves, and I'm sure that when we're back on next Saturday headlines, we'll have an update of some sort to share with you on the latest on that one.
Yeah, within the story, there is a suggested timeline from David Kendrick from UHY, who says that a vote will take place, and assuming it's accepted, the deal will then move forward, subject to OEM and FCA approval. Exciting times after it looked like the deal may have been dead. So, watch this space on that one.
I mean, moving on to the next story, not quite as probably as muddy as that one, to be fair. We're into politics now. We're going on to AM Online, and there's been quite a few interviews this week coming out of with the government there, and particularly with Prime Minister Rishi Sunak around the government's deadline for the 2030 ban on the sale of new petrol and diesel vehicles, and saying that the deadline for 2030 petrol and diesel ban in doubt as government reconsiders net zero strategy. Now, what is interesting with this is they've always, in all the interviews, they've said we're sticking to the 2030. However, there might be changes. So there's been some hints coming out, and a lot of this, and we were talking before, sure, this is around the recent by-election, which one of the votes and outcomes was because of the UZEV in that area, wasn't it?
Yeah, this was the Uxbridge by-election, where the extension of the ULEZ zone, the clean air zone, was a hot political topic, and what looked as though it was going to swing towards Labour actually stuck with Conservatives, because London is run by Sadiq Khan from Labour, and this is one of his key policies, extending the ULEZ zone. So there's been a lot of nervousness in Westminster ever since that by-election, and there's been talk about really sort of rolling back on some of the net zero promises, and certainly the 2030 ban on new petrol and diesel cells has been very much under the sort of microscope on this one, especially as it was a target that was brought forward by 10 years and as it stands is 5 years ahead of what's happening elsewhere in continental Europe. So much like the first story, I think there's more to play out on this one.
Yeah, I mean, it is unknown. I think, they approached me for comment on this, did the market, and share the views that, clearly the 2030 deadline is the right thing to do. I think to change direction on it now would harm the industry more in terms of the amount of research, development, investment that has happened all the way from the OEM through to the retailers. Question in doubt is whether we will be in a position to do a complete deadline by 2030 and then by 2035 with no alternative fuel in their pure battery electric vehicles by 2035 in the UK, and whether the 2030 deadline really needs to be 5 years ahead, as you said there, of Europe, because that does start to change things when we start heading into 2024 with the ZEV mandate, which increases the benchmark to 22%. UK faces, as we covered it recently, in terms of that rules of origin starts to change, and the potential risk of tariffs, and the complexity around a battery and its components within a battery electric vehicle in terms of how that's made up in terms of local parts and material. And it's all starting to come to a head, and it's sort of 2024 is that point that everybody is now starting to question. And I think one of the points trying to make on this is that, this should really be kept away from politics to a degree, particularly the voters, and they shouldn't really be trying to attract the voters around this. Is it the right thing to do? Is it, if it's wrong, if we're not going to achieve it, then change it for the right reasons, not to win votes in certain areas. And that's the big question that's starting to come out of a lot of this now.
Yeah, that kind of implies that politicians are a cynical bunch.
Try not to get into politics. Yeah.
But you're right. After Uxbridge, it is an easy sort of bandwagon to jump on for all parties really. So, but as you say, the wheels are very much in place. Everyone is geared towards 2030, and the amount of disruption it's going to cause for the industry, for suppliers, for retailers, for car buyers, is it worth it? But we'll see how that one goes.
And the uncertainty can be more damaging with these kind of things as well. That if they are going to do something, make a decision and do it so that people can plan and everything else. I think leaving this uncertainty and ambiguity in terms of what you're saying and in interviews and things like that is actually more damaging, because it bears question into everything. So I'm sure this one isn't going to stay there, and we'll watch this one play out as it develops, like the other story. But a lot of developing stories, Curtis. It's not quite black and white these days, is it, with our story?
Oh, it's not. And I suspect the next headline will be a developing story as well, because we'll head over to Car Dealer, and the headline is 2/3 of used car dealers are worried about margin erosion. Well, when haven't they been? To be honest,
Slight topic there, isn't it? Yeah.
Yeah. So the story looks at 2/3 of used car dealers fear future margin erosion will affect their business, and this is according to new research from Startline, whose latest used car tracker polls 50 dealers, showing their biggest concern, and 66% says it's this move towards squeezed margins, which is causing them the biggest concern at the moment. And Paul Birdless, the CEO of Startline, says, we've been seeing increasing concern about margin erosion among used car dealers in recent months. And this month's tracker shows that it is a genuine worry. And he goes on to say, this is very much generated by the stock shortages, which certainly we've been covering on the podcast. And he goes on to say, and the resulting high prices and values of vehicles. And it is clear that profits are being threatened from many directions, while new opportunities are perhaps currently more difficult to identify.
Yeah, and I suppose it's an interesting point, isn't it? I mean, we were saying before about, they've had enjoyed some very good profit margins as product became scarce. Retail values held very firm and went up. Even in the new vehicle market, they could hold retail prices for a lot of the new cars on long lead time. So the dealers have enjoyed very good and very healthy profit margins over the period. To counter that, we've obviously got the economy, we've obviously got increased base rate financing, which increases on lending, pressure on cost of living, pressure on energy costs, and pressure on labour as well in terms of that salary and everything that's going on there. So yes, enjoying increased profit margin, but also on the balance sheet incurring significant increase in costs as well. So I think there's a lot, again, we're seeing this a lot play out. But again, they do make a point in here that, around that electrification and the cost of transitioning to electrification, the investment in this transition to electrification, which does link into the previous story there. But actually all the work they're doing around consumer duty regulations that come into effect at the end of July, and the efforts that they're putting into that as well. So I don't know, there's a lot for the dealers to get their head around at the minute, isn't there, Curtis?
There certainly is, and a timely reminder that consumer duty went live from, it goes live from the 31st, doesn't it? That's Monday.
Yeah. So they've been working very hard with that, I know, across the market. But again, we'll keep a close eye on this, and we'll see where the margins start to end up in the second half of the year.
You're listening to all the chatter that matters on Motor Trade Radio, powered by eBay Motors Group. This is your weekly one-stop shop for all the biggest car retailing headlines from across the media, available on demand wherever you are on your podcast feed. Next up is our latest Menable moment, looking at mental health and well-being awareness, issues and best practices across the automotive sector, with me, Stephen Whitton. Yeah, hi everyone, it's Menable Moments time again. Hope you're well. What is it that you want? What is it that you actually want? That question was asked of me last week, and the timing of that couldn't have been better, because it's come at the end of a period of time for me where a couple of my mentors have been saying to me, you need to be more intentional. And at first I was thinking, I'm not sure what that actually means. And then when this person said to me, well, what is it that you actually want? My mind went off to think, well, I'm not conditioned to use the word want, because as a child, I seem to remember if ever I wanted anything and I asked directly for it, my parents, grandparents, carers, whatever, anyone around me, older than me, or people observing would say things like, I want doesn't get, or those that want don't get things, and stuff like that. So I was kind of conditioned to not use the word or words, I want. And that's kind of stayed with me. And I think, given that we're all in a world where it's getting louder, it's more confusing, there's loads of noise everywhere and messages coming from all over the place and different things going on, if you're like I have been and not very intentional, then it's going to be easy to not be able to identify what it is that you want. Let me say that again, because that even sounded confusing to me. It's going to be easy to not identify what it is that you do want, because there's so much coming at you from all directions. Now, conversely, what we do have a habit of doing is focusing on what we don't want. And while it's important to identify in all of that what you don't want, actually there is an element of, when we are overwhelmed, when lots of stuff is going on, it's very easy to focus on the things that we don't want. And if you are a believer of the law of attraction or any of that stuff, then you'll know that quite often doing that actually brings more of what you don't want just by sort of thinking about it. It kind of manifests, I guess. So whether that's about debt or relationships or poor career choices, poor choices in general, whatever it might be, if you're dwelling on that, what you don't want, you run the risk of attracting more of that to you. Now, in the last week or so, I have intended to be far more intentional. And as a result, what I've started to do is to close down a few things that aren't helpful, things that aren't adding to the agenda. And that's a bit like, having your PC on and you've got all sorts of files and stuff going on in the background. And many of them you don't need open. So you start closing them down, and funnily enough, your PC starts to respond and operate far more efficiently and effectively. So if you needed a reason to be more intentional, then perhaps that's it. But I would also emphasize that think about the people around you, as I always say, and are they really focusing on what it is that they want? Now, that's easy to do and easy to be intentional when you're in a pretty good place. But if you're not in a good place and things are overwhelming, then the last thing you want to hear is someone else telling you to be intentional and to decide what it is that you want. So take care with that. Be careful with the people around you. But as always, as we say, stand shoulder to shoulder. Keep an eye on them. Their well-being is their responsibility, 100%. But we all have a duty of care, I guess, to help people to get what it is that they want and identify what that is. Couple of shout outs this week. Firstly, I want to say a massive thank you to Keyloop for working with us on the Wellbeing Winners, and a massive thank you to Harvey for a lovely comments last week on the podcast. Also, our sponsors, eBay Motors Group, for the Wellbeing Winners program, which is now really starting to gather some pace. And we took an inquiry for our very first independent used car dealership to embark on that journey with us. So absolutely delighted about that. And if I'm taking one thing from this whole week, of course, I've got to give a mention to the loss of Sinead O'Connor. Yet another star has gone from our midst. Particularly poignant, of course, because one, she was the same age as me, and two, what an absolute groundbreaker, and someone who wasn't afraid to stand up for what she wanted and what she believed, and even whilst battling, as we now know, some pretty horrendous mental health issues. So can't let this week go without making a mention there. So have a think about that. Think about the people around you. What is it that you want? Are you being intentional? Are they being intentional? And when you start having those conversations, I believe you will actually start creating some mental wealth. And what I want is for the people in your business and for your business to absolutely thrive. You know how to get hold of me, stephen.whitton@menable.org, and I will speak to you next time. Take care.
Phil, plenty to take in there. Lots to digest. So many thanks to Steve once again for another memorable Menable moment. And I want doesn't get a timely reminder there.
Yeah. I bet you're sat thinking, what direction is this going at the
Yeah,
start?
I was, and I would never have got to Sinead O'Connor from where he started. So, yeah, but I must add to his thoughts. I mean, very sad news about the passing of Sinead O'Connor there, and it was good for him to mention that and to fit it in with the context of mental health and mental wealth.
Yeah, definitely. So back to the headlines then, we're heading over to motortrader.com, and it's like an update here from a couple of acquisitions. So Motorway acquires Total Car Check. Now, this is Motorway have said that the acquisition then provides them with the vehicle provenance checks that Total Car Check operate within. and that the acquisition further strengthens its focus on vehicle data accuracy and transparency for its customer and car dealer customers, and adds total car check staff to its team. So a bit of an acquisition there that moves sort of motorway into another space within the sector and supporting their customers, Curtis.
Yeah, and very much consolidating their position. And, this looks like a really good purchase for them because their whole model is built around supplying customers with accurate car prices for their current models, and buying it from them. So if they can improve that accuracy through using Total Car Check, that makes perfect sense. Now, Total Car Check have actually been around for quite a while, founded in 2009 by David James, who actually moves with the acquisition, as indeed his staff does as well. And they generate over 42 million UK vehicle checks, which that's what they did last year. And that was an increase that saw them increase revenues of around 30%. So, a good, successful business there, and you can understand why they were of interest to Motorway.
Yeah, and alongside that, they have also announced this week that they've appointed a new CFO. Is Liz Kistruck, as the company's first chief financial officer. Liz joins the business from fashion technology platform List, where she was the CFO. So again, seems that Motorway is now moving in another direction and adding to its senior leadership team there. So I suspect we'll hear a little bit more from Motorway over the coming months on that one.
And you know what, Phil? You wait for an acquisition to come along, and suddenly there's two of them. So the second acquisition of this week was reported by AM Online, and the headline is Carlisle to acquire used car finance platform Evolution Funding. So this is the acquisition of Evolution Funding, the UK used car finance platform, and it's been acquired for an undisclosed sum. But the acquisition includes investment alongside Evolution's founders and existing investor LDC. So the transaction is, of course, subject to FCA approval. But they're based in Chesterfield. Evolution is very much a tech-led finance platform that connects dealers and finance providers with multiple lenders. So this looks like another good acquisition, doesn't it?
Yeah, it does. Yeah, like you say, we're just starting to see this start to come along, and we obviously do talk a lot about dealer acquisition, don't we, on the podcast? But starting to see this consolidation in other areas of the sector now, whether that's lending and other areas that starting to see this consolidation and acquisition as businesses start to streamline and look for alternative ways of growing their business. So it's interesting to see that one. We have got a fantastic and finally for you this week, and if you've not seen the story, then we would urge you to head over to Car Dealer and have a look at it. It is the subject that we've been covering now for some time, Curtis, on the world of agency model. And the link will be shared on the newsletter on Monday morning as always. But this is what are car makers planning, and this is an investigation by Car Dealer into what car makers are switching, or which car makers are switching, should I say, to haggle-free fixed price agency sales, and by when. And I think the results are quite interesting on this one, aren't they, Curtis?
That they are fascinating. So again, hats off to Car Dealer for really originating this story, because it's their research. So what they did was they asked all 47 car brands currently operating in the UK a simple question: when will you move to agency sales? So simple question. The answer is possibly not so simple in some cases, but because as they point out in the piece, many found that question very hard to answer. Only 8 car manufacturers categorically ruled out moving to agency completely, but there's quite a few sitting on the fence, isn't there?
There is, yeah, and 15 of those approached failed to respond, and 6 responded with no comment, which you can read into that whichever way you want to read into that one,
Yeah.
can't you, I suppose? And 18 basically confirmed that they were moving to agency. So no surprise there that that we know that we talk about a lot of them already in terms of their intentions, and some of them have been delayed, some moving earlier than others, some that are declaring that they are sitting on the fence but probably have an intention to move to agency. But it is great for Cardiel that have got, I suppose, confirmation from the 18 that they are going to agency, and those that are saying no, they've got no intention to move to agency. So yeah, it's fascinating findings on this one.
It is, and what we particularly like about this story is the graph. We've had a bit of fun with this before recording the show, so you can. And I do urge you to go over to the story and have a look at the chart, because you can toggle it. You can list manufacturers by in alphabetical order, or in order of how they answered. So you get all the no's, all the yeses, all the no comments, all bunched together, which is quite a handy way of looking at it, isn't it?
It is, yeah, and I suppose from, again, alluding to what we've just mentioned earlier, but on some of the confirmations that did answer, they did actually comment onto when they were. Now we know that Volvo is moving already. We know that VW, and it says Volkswagen here, but after Skoda, but before the end of 2023. There's a bit of an asterisk there. I haven't looked at what the asterisk means, I suppose.
See comments in story.
There you go. Leading back to the story all the time. I wouldn't expect anything less from the car dealer team. Tesla, essentially agency anyway, aren't they? And some of the others, you've got Jaguar there confirming that, and sort of JLR, should I say, so Land Rover and Jaguar confirming November 2024. Maybe others there that, we know about Genesis. We've spoken about that one recently, but they've confirmed that 1st of Jan next year. Cooper's already gone live with it, but BMW have confirmed in the response 2026 with the asterisks that read the story. But yeah, there's a lot there, but it is interesting. You've got no comments, no plans yet, or no plans to switch to agency. So Nissan have said no plans yet, whereas your Toyotas and your MGs, your Maseratis have said no plans to switch to agency. So it is a great investigation, as you'd expect from the car dealer boys with this one, that done some great work on this.
Yeah, and the failed to respond, that's actually a long list, and worth looking at those who chose not to reply either way. But yeah, it's a great piece of research here, and they do go into a lot of detail brand by brand as part of this story. So if you are in any doubt as to who's doing what regarding agency, you'll have a better idea after reading this particular story. And I hope they update it as well, because that some of these will actually be showing their hands pretty soon. So it'd be good to see where they are, where they fit into it. So I think we'll hear more from this story as well.
I suspect car dealer will get a little bit of longevity out of this one, won't they? That as and when they update and who goes live when they go live, I think it'll be a fantastic data source for them to be able to create stories and output from. So I hope they do anyway. So if you've not done already, then please do that, guys. It's car dealer. So it would be a great reference point to see who's going and who's not going as and when. But that's it for this week. I mean, hopefully we've managed to keep you enthralled with our input. It wasn't too long like last week. And as always, we will be sharing those links to the stories and the YouTube trailer for the next Mission Impossible 6, is it? I'm not sure we're up to with Mission Impossible, I'm not sure. Or is it Fast and Furious? I'm not sure what to reference on this one, but we'll share the link to that one, and hopefully we'll be able to keep you updated when it does go live. But yeah, that's it for this week, isn't it, Kurt?
It is, yeah. Unfortunately, that is all we've got time for. So many thanks for joining us on the Motor Trade Radio podcast. Until next weekend, it's goodbye from me.
And it's goodbye from him.
You've been listening to Motor Trade Radio podcast, powered by eBay Motors Group. We'll be sharing all the links from this week's headlines on Monday morning. So to make sure you receive them, just subscribe to the free newsletter on our LinkedIn page. Just search Motor Trade Radio Podcast.